Welcome to Intrendias. We are doing a portfolio review in this video to keep track of what Intrendia has covered and see how the price has moved since then. Initially, for sold stocks, we have CVS and HAYN International. CVS, the pharmacy, and then HAYN International produces high temperature alloys for aerospace and chemicals and things like that. For CVS, we're seeing a 5.3% gain, and HAYN International a 9.1% gain. And both of these stocks were held for about a month. So being able to grab a 5 and a 9 within a month definitely beats a 5% CD. In terms of CVS, the trade thesis was with the help of the Intrendias website, we're using the MIA terminal where it helps us use technical analysis and a Python algorithm to provide buy and sell signals. We've seen a lot of downward pressure for CVS ever since the start of 2023, and we've been getting a lot of buying trickles in three groups. So the idea here was I got in around May 17th. There was a buy signal on that day. And for two previous times, I saw the stock price hit the EMA 26 line and EMA 50 line. So the idea here for me was a quick grab and go where the terminal told me to buy on May 17th. I entered there and I exited near the EMA 50 line at around $72 a share. For HAYN International, we had a lone buy signal here on also May 17th. I was a little late to reading this, so I entered shares on May 26th instead. And then we saw the stock rally to around $51 a share. And that's where I sold, because in a recession scared environment and with inflation and prices rising, I was relatively happy with 9%. I was like, okay, let's exit there and carry on the aisle and move on. After selling at 9% gain, the stock did drop back down to the EMA 50 line, and perhaps the EMA 50 line would have been a good time to purchase back into the stock as it has increased since then. Perhaps in a future video, we'll analyze HAYN International and go from there. So CVS and HAYN were two sells. The next category is stocks that I currently do hold. However, these are not sold and they're still active positions. These include Berkshire Hathaway, we have Dominion Energy, Campbell's Soup, Kraft Heinz, Apple Hospitality REIT, Dynex Capital, Bank of America, and Apple. The only stock that is down in return is Kraft Heinz, down 0.2%, and the other ones are doing quite well, with BRK.B at 6.3% up, Dominion Energy is up 4%, and Apple, these shares were held since 2022, so have been up 43% on that. I would love to do further analysis for Berkshire Hathaway and Apple, as Apple has increased up to the $3 trillion club in their market cap. So I think that's due for another review to see where the stock would go from there. I did review Apple in a recent episode where in a greedy environment with recession, costs are increasing. It might not be the worst time to put some chips off the table. So if you'd love to hear more about Apple, I would love for you to click that video and let me know what you think. Kraft Heinz is down because General Mills also had a not so great mixed earnings report, and that negative news did bleed into Campbell Soup and KHC. So those two are relatively low. APLE is Apple Hospitality. They are a hotel business. They own the properties and they lease to very well-known brands like Hilton and Hampton. The Consumer Confidence Index is up from April, and if we continue to see consumer confidence increase, we will also then see more vacations being booked and therefore more hotels being booked. Not only with the Consumer Confidence Index score going up, real estate prices have also been rising. So not only is business activity going to be well for APLE, but also the very foundation, the buildings, the property, the value of that also increases with it. So their assets and business line is positioned to be very well for them. Same analysis with Bank of America. Consumer index is up. Perhaps this will mean that more loans will be originated. Bank of America is also expanding into 4 new states to compete with JP Morgan. So they seem to be very well positioned in those 2 areas. With that being said, our performance is beating the Dow Jones. However, the S&P is up 16% and the Nasdaq, thanks to the AI boom with Nvidia chip cards, the Nasdaq is up 32%. So with Intrendias, we are at 7.6%. The average return still beats a 5% CD, but at the same time, perhaps just pummeling dollars into a large S&P index or Vanguard may not be such a bad idea. We are also seeing the stocks that the channel did cover, but the conclusion was a don't buy stance. We're seeing Tesla and Nvidia do fairly well since the video publishings. We have Tesla up 5% and Nvidia up near 2%. I think it would be very interesting to revisit those 2 videos. Essentially, Tesla in the short term was considered a don't buy with volume gaps that potentially need to be filled back up, and those are pointing towards the downside. And then with Nvidia, we had a great AI rally hitting all-time highs for Nvidia and AMD and shares like that. So with such exponential growth, the Nvidia video stance was to take some chips off the table and enjoy the winnings. But we're seeing slight growth since the video published. So I think it'd be very interesting to review that video as well. The video also highlighted that insiders are selling their shares, and who knows more about the stock than the people that run it. So perhaps it's good to mimic what the insiders are doing and sell your shares. Not financial advice, of course, but just something to share with you and entertain you. SPCE space is down 10.6% even after their first successful commercial space flight. The Virgin Galactic video stance was don't buy, with high retail volatility, retail investor interest, and potential flight success already baked into the stock price. You could watch the most recent space video in the top right corner. Simultaneously, the video also pointed out how Virgin Galactic's cash position is not enough to be sustainable because Virgin Galactic's Delta class ships will not be ready until 2026. And the cash on the balance sheet compared to how much operational expenses they are enduring will only last for a year and a half. So this will point to potential more stock diluting as Virgin Galactic needs to raise more funds. So that being said, this has been the portfolio review. Thank you for watching. I hope you enjoy what you see in this video today. Hit the like and subscribe. I would love to hear your comments down below. Let me know what other shares or stocks you'd love to see covered in future episodes. This has been Intrendias. We will see you in the next one.